In this video, I'm going to show you that beating the S&P index is really simple. In our database of 2,500 breakout strategies in our hedge fund, we actually, all of our strategies easily beat S&P index. That's nothing complicated. Beating S&P index is really simple. You need just few quality tricks. As you can see, we actually have almost 300 strategies just for S&P. This is E-mini S&P futures contract. All of them, as I said, beat the index very easily. But before I start, let's have a look what is the annual average return of S&P 500. So I asked ChatGPT, as you can see, based on his information, for the last 10 years, it's been about 12%, and for the last 20 years, about 10%, which I personally think is very low. With good breakout strategies, you can make 10 times more. So let's have a look what principles would I use for this. Okay, so this is a model strategy. If you want an actual strategy from our hedge fund with all the explanation and details, click on the link below. It includes the code. It's completely for free, but I just want to show you that you really need just a few simple tricks and principles to beat the S&P 500 index. So principles I would use for the simplest strategy to construct very quickly would be, first of all, indexes are pretty driven by daily moving average 200 or 252. 252 represents 1 year, and in our hedge fund we've been working with banks and some institutional investors, so I know what they do, how they approach trading in banks, and they always look at a moving average 200 or 252. So it's heavily embedded into their point of view, and it's a very universal principle which works pretty well for indexes. So only this condition, trading above or below moving average 200 or 252 on daily data, does give you already an edge. I already shared in the one of the previous videos and different strategies which I described on this channel that we use a lot ADX filter, which is a very powerful filter. We calibrated ADX for all the indices and indexes, so we know very well what are the robust high quality values that you can keep using again and again. This is one of the conditions that you can keep using again and again. It's a very robust condition, so we only want to enter where there is some strength in the trend utilizing ADX. And then, as always, we use a simple breakout model, which we built based on the framework from the breakoutradingrevolution.com book. Very simple, very straightforward. So in this case, we take previous day's close and we enter on 2 times of the volatility. So we add 2 times of the volatility. That's it. We stay, once we are in the market, we stay till Friday and we close the position on Friday with a small stop loss of $1,000. This will be demonstrated on the E-mini S&P market. Now, just let me repeat again, this is a model strategy. If you want actual strategy from our hedge fund, click the link below. It's completely for free with complete walkthrough. Now, if we put this simple code, which I literally created in 3 minutes, into S&P daily, this is daily data, this is regular trading hours data, 45 minutes, the first time frame, second time frame daily for ADX. So this is regular trading hours, and TradeStation.d means only regular trading hours. We can see that during last 10 years, we would make over $60,000, about $6,500. Now, the biggest drawdown would be about $15,000. So you approximately need $20,000 account to run a strategy like this. Now, I'm not going into differences between trading ETFs, stocks, Forex. You can watch other videos on this channel or do your own studies on different channels. So I'm not going to argue what's the proper calculation. You do your research, guys, but I just want to show you, you can trade this simple concept with the 20K account, and in last 10 years we would make $65,000, which means about $6,500 on average pay per year, which is about 33% return or something like that. So it's very easy to beat the S&P annual return, which is about 10-12%. With even a decent, very basic breakout strategy like this, you can easily make 20, 30, 40% per year, as I said, very easily. This is again a model strategy. Usually we have way lower drawdowns, way lower risk, way better constructed strategy, which can easily make even 10 times more than a normal S&P index. Again, you can see the whole example on the link below. So I believe that beating index, it's really easy. All you need is a few proven tricks and then deploy them correctly, and you can have as many strategies as you want. By the way, this just to show you, the principles are really universal. They work very well on other indexes. This is E-mini Dow Jones, this is E-mini NASDAQ. So if you would take these simple principles on E-mini NASDAQ, you get even better results. You can also combine them on multiple indexes. So that's it for now. Next time I'll share with you another strategy.